what is financial statement analysis, how to do financial statement analysis, why financial statement analysis has to be done, how does financial statement analysis helps businesses and business executives and businessmen, owners, promoters, investors, vendors, suppliers, customers, employees, government, and everybody. This is what we are going to cover in our session of today, and that is financial statement analysis. Friends, in the domain of finance, if any decision has to be taken, one very critical and important requirement for decision making is to do the financial statement analysis. Now, what is this financial statement analysis and how it is carried out? What are the aspects that needs to be that those needs need to be looked at? That is what we are going to cover in this session today on financial statement analysis. So, number one, what is the purpose of financial statement analysis? The answer, of course, is very simple. The answer is there are three financial statements in the domain of finance. There are three prime financial statements in the domain of finance, and those three financial statements are: number one, the balance sheet; number two is the P&L; and number three is the cash flow statement. So, number one is the balance sheet, number two is the P&L, and number three is the cash flow statement. What is the purpose of all these three financial statements? And the purpose, of course, is very simple, and that is to help all the stakeholders of a business to take a decision about that particular enterprise or that particular business. So that is the purpose of financial statement and for financial statements. But please remember, the financial statements only give you absolute numbers. They do not give you a decision, and which means what? Which means for moving forward, for taking decision, we have to go one step further, and that one step further is the financial statement analysis. Now, what is financial statement analysis? Financial statement analysis simply mean how to use the financial statement, analyze them so as to be able to take decisions about a business. Now, if we have to analyze, if we have to evaluate, if we have to find out as to how a business is doing, how a company is doing, there are different aspects that we need to look at. Now, what are those aspects? In my view, there are 8 aspects that need to be looked at for arriving at evaluation about a business. What those 8 aspects are? Number one is the profitability and performance. Number 2 is liquidity. Number 3 is solvency. Number 4 is efficiency in utilization of the fixed assets. Number 5 is efficiency in effectiveness in working capital management. Number 6 is financial leverage. Number 7 is valuation of a business, and number 8 is economic value added, which is the overall indicator of a business as to how that business is doing. So these are 8 aspects, friends, that need to be understood, that need to be looked at for arriving at any decision in the domain of finance. We will now look at all these 8 aspects one by one, starting from the first one, and the first one is profitability and performance. So first is profitability and performance. So please remember, profitability of any business can be looked at from 3 different angles. What those 3 different angles are? Those 3 different angles are: number 1, profitability looked at from the perspective of sales. Number 2, profitability of a business can be looked at from the perspective of return given to the people who have given the capital. So profitability of a business can be looked at from the perspective of capital provider, यानी कि जिन लोगों ने बिजनेस को कैपिटल दिया है उनके पर्सपेक्टिव से भी हम प्रॉफिटेबिलिटी को एनालाइज कर सकते हैं. एंड नंबर 3, वी कैन लुक एट द प्रॉफिटेबिलिटी फ्रॉम द पर्सपेक्टिव ऑफ efficiency in using the assets, efficiency in using the assets of the business. So these are, friends, the 3 different perspectives for analyzing profitability of any business. So number 1 from sales perspective, number 2 from the perspective of capital providers, and number 3 from the perspective of asset utilization. That means how efficiently a business is using its assets, what kind of return the business is able to generate, what kind of operating profit a business is able to generate from the use of those assets. So these are the 3 angles. Let us now look at one by one. So number 1 is the sales. From the sales perspective, we calculate a ratio which is known as gross profit ratio, GPR, gross profit ratio. How do we calculate the gross profit ratio? Gross profit ratio is gross profit divided by sales into 100. Now this is your gross profit ratio. Now what does the gross profit ratio tells us? Gross profit ratio, friends, remember, tells us about the attractiveness of the industry in which this company is. Remember, when will the gross profit of a company be very high? Gross profit of a company will be very high when number 1, the company is able to command a good selling price, and number 2, the material cost of the company is relatively low. So only in the situation where the company is able to command a premium selling price, and number 2, the material cost is also low, in such a case the gross profit of this company is going to be very high. So gross profit, please remember, is an indicator about the industry attractiveness. Number 2 ratio that we would calculate, or we can calculate, or we should calculate from the sales perspective, is known as EBITDA margin ratio. EBITDA margin ratio. And how do we calculate EBITDA margin ratio? EBITDA margin ratio is you take your EBITDA in the numerator and divide it by the amount of sales of the company and multiply it with 100. So that's your EBITDA margin ratio. Another very important ratio in the domain of finance, and it also gives an overall idea about the attractiveness of a business. Remember, friends, EBITDA for any business is a very key figure, is a very important number. And why it is very important number? Because किसी कंपनी की EBITDA जितनी ज़्यादा स्ट्रांग होगी, वो कंपनी का उतना ज़्यादा वैल्यूएशन होगा. और क्यों उतना ज़्यादा वैल्यूएशन होगा? बिकॉज अल्टीमेटली what gives life to a business, what gives a long life to a business, it is the cash profit, cash operating profit. And EBITDA is nothing, friends, but your cash operating profit. So you can calculate your EBITDA margin ratio. And how do you calculate the EBITDA margin ratio? You will calculate the EBITDA margin ratio by dividing EBITDA by the amount of sales into 100, and that will give you the EBITDA margin ratio. Number 3, what we calculate to evaluate the profitability of a business from the perspective of sales is the net profit ratio. And how do we calculate the net profit ratio? Net profit ratio, of course, is we take the EAT, earning after tax of the business, divided it by the amount of sales into 100, and that gives me my net profit. Net profit, friends, please remember, is an indicator of overall performance of a business. And why net profit ratio is an indicator of overall profitability of a business? And that is because the amount of net profit, the amount of EAT, earning after tax, is arrived at after adjusting all the expenses including the tax, and therefore the net profit ratio becomes one of the key KPI in evaluating the profitability of a business from the perspective of sales. Now this is one angle for looking at profitability of a business. The second angle is from the perspective of capital providers. Now, how do we calculate, how do we evaluate profitability of a business from the perspective of capital providers? So from the perspective of capital providers, again we can calculate number of ratios. So which are the ratios that we can calculate from the perspective of capital providers? So from the perspective of the capital providers, first of all we need to understand as to who are the people who provide capital to a business. Remember, there are only two sets of people. There are only two sets of people who provide capital to a business, and which are the people who provide capital to a business. And number one is the equity shareholders, and number two are the lenders, or the people who lend money to the business. So from the perspective of capital provider, how do we evaluate profitability? So what are the ratios that we calculate for evaluating performance of a business, profitability of a business from the perspective of capital provider? So the first ratio that we calculate from the perspective of the capital provider is return on equity. So the number one ratio that we calculate for finding out as to how is the profitability of the business from the perspective of capital providers. So the number one ratio is return on equity, ROE. And how do we calculate return on equity? We will calculate return on equity by taking earning after tax and divided it by equity, and equity would be into 100. Now, what is the meaning of equity here? Meaning of equity here is total of equity share capital, total of share premium in case if company has issued shares in the past at a premium, and number three, the total of all the reserves and surpluses. So total of these three components: number one, the paid up equity share capital; number two, the share premium; and number three, the reserves and surplus combined together is referred as equity, and it is also referred as net worth. So how do we calculate return on equity? Return on equity will be earning after tax divided by the amount of equity into 100, and this will give us the ratio of return on equity. ये रेशियो हमको क्या बताता है? This ratio tells us as to what kind of return as a company we are earning for the shareholders of the company. That means वो जो जिन लोगों ने हमको बिज़नेस को इक्विटी कैपिटल दिया है, जिन्होंने बिज़नेस में अपना पैसा लगाया है, उन लोगों को ये बिज़नेस क्या रिटर्न दे रहा है, दैट इज़ व्हाट यू विल कम टू नो फ्रॉम द रिटर्न ऑन इक्विटी. सो हाउ डू यू फिगर इट आउट वेदर इट्स ए गुड रेशियो और बैड रेशियो? आंसर ऑफ कोर्स इज़ वेरी सिंपल. जितना ये रेशियो ज़्यादा होगा, इट इज़ सो मच बेटर. सो हायर द रिटर्न ऑन इक्विटी बेटर इट इज़, बिकॉज जितना ज़्यादा होगा रिटर्न ऑन इक्विटी, इसका मतलब ये है कि बिजनेस उतना ज़्यादा रिटर्न अर्न कर रहा है फॉर द शेयर होल्डर्स. The ratio number two that we would calculate to find out profitability of a business from the perspective of capital providers is referred as, this is number one, and the number two is known as return on capital employed. Very important ratio, return on capital employed, and a very important ratio, and it gives an idea as to as a business what kind of return the business is earning for the people who have given capital to the business. Now friends, let me tell you, return on capital employed is one ratio which is highly misunderstood and miscalculated, not only in India but all over the world. And this I can tell you friends, because I have delivered my training programs in more than 50 locations across the globe. अमेरिका में, यूरोप में, रशिया में, एशिया में, मिडिल ईस्ट में, अफ्रीका में, सारी दुनिया में प्रोग्राम देने के बाद और सब जगह जब मैं ये डिस्कस करता हूँ रिटर्न ऑन कैपिटल एम्प्लॉयड कैसे कैलकुलेट करते हैं, तो मैंने महसूस किया और देखा है कि सब जगह पर लोगों को रिटर्न ऑन कैपिटल एम्प्लॉयड को कैलकुलेट करने में मिसअंडरस्टैंडिंग है, एंड 99.99% पीपल मेक मिस्टेक इन कैलकुलेटिंग द रिटर्न ऑन कैपिटल एम्प्लॉयड. But I am sure those of you who are watching this video, after watching this video, will never ever make a mistake in calculating as to how to calculate the return on capital employed. Let's understand how do we calculate the return on capital employed and what mistake people do, and then we will understand as to what is the right way of calculating return on capital employed. So what is return on capital employed? return divided by capital employed into equity. So this is the simple formula for calculating the return on equity. What is the mistake people do? People make two kinds of mistake, and what are those two kinds of mistake? The mistake number one is people do not have clarity about as to what is capital employed. So when I ask people as to how do you define capital employed, believe me, I get all kinds of answers, and rarely I get an answer which is absolutely correct. So that is mistake number one people make in calculating the return on capital employed, and that is they lack the basic understanding as to what is the meaning of capital employed. How do you define the capital employed? What is the second mistake people make in calculating the return on capital employed? The second mistake that people make in calculating the return on capital employed is about the return. It is about the numerator. So invariably I have seen people will make the mistake of taking either the earning after tax in the numerator, or they will take EBIT in the numerator for calculating the return on capital employed. And please remember, if you make either of these two mistakes, that means if you do not define capital employed and take the figure of capital employed correctly, or if you make a mistake in not taking the right numerator as part of the return, then your return on capital employed is never going to be correct, and therefore we have to ensure that we do not make either of these two mistakes, and thereby are able to calculate our return on capital employed very correctly. So meaning what? How do we ensure that we do not make a mistake in calculating our return on capital employed? Number one, let's understand as to what is capital employed. And friends, let me tell you, the definition of capital employed is very simple, though it is misunderstood very widely, but the definition of capital employed is very simple. And what is the definition of capital employed? The definition of capital employed is money that you put into the business is capital employed. Money that you bring into the business is capital employed. यानी कि वो पैसा जो आपने business में लगाया, that is the capital employed of the business. It is as simple as that. But different people will come out with different responses and answers, and which are extremely imaginative at times. Now the question is, what is the capital which is brought into the business? And answer of course is very simple. It is the debt and equity. So what is capital employed? Capital employed is very simple. Money that you bring into the business is capital employed. And what are the forms in which you bring the money into the business? There are only two forms. Number one is the equity, and number two is the debt. So all the long-term debt plus all the equity that you have in the business put together is your capital employed. I am sure you must be absolutely clear about it as to what is capital employed. And so we are eliminating possibility of the first mistake of incurring or of making the first mistake in the first place. So how do we calculate the return on capital employed? My capital employed is what? My capital employed is equity, total of equity plus debt into 100. Now I am sure you would understand very clearly. I am calculating return on capital employed. What return on capital employed tells? The return on capital employed tells as a business how much return you are giving to the people who have given you capital. Who are the people who have given you capital? So you have the equity shareholders and you have the lenders, and these are the ones who have given you the capital. Therefore, what should come in the numerator? Answer of course is very simple. What should come in the numerator when you are trying to calculate the return on capital employed? It has to be number one, earning after tax. And why earning after tax? Because earning after tax is the return that the business has earned for the shareholders of the company, for the owners of the company, or for the equity holders of the company, and that's your EAT. So that is the return that you are giving to the people who have given you equity. Now what is the return the business is giving to the people who have given it borrowings or debt? And that means lenders. So on the debt, what the business does, all the borrowers, all the lenders, all the people who lend money to the business, what business give to them? Business gives to them is the interest. So how do we calculate return on capital employed, friends? I am sure you will never ever make this mistake of calculating as to how to calculate the return on equity, return on capital employed. And this is very simple: earning after tax plus interest, interest on the long-term debt divided by equity plus long-term debt put together into 100, and this is your return on capital employed. So these are the two ratios that you will calculate from the perspective of evaluating a business or business's profitability from the perspective of capital providers. Is that all? Of course not. So there are two more ratios that you would calculate, that you will calculate for the purpose of ascertaining profitability of a business from the perspective of capital providers. What are those two ratios? Those two ratios are, as you can see on your screen, number one is earning per share and number two is the cash earning per share. Number one is the earning per share and number two is the cash earning per share. All right. So let's look at earning per share. How do we calculate earning per share, which is EPS, earning per share? Now before I tell you as to how to calculate the earning per share, friends, let me tell you, ये जो रेशो है, ये जो KPI है, अर्निंग पर शेयर, दिस इज एक्सट्रीमली क्रिटिकल एंड दिस इज नॉट ओनली एक्सट्रीमली क्रिटिकल बट इट इज़ ऑल्सो द मेन ड्राइवर ऑफ द टॉप मैनेजमेंट ऑल ओवर द वर्ल्ड. तो पूरी दुनिया में जितनी भी कंपनियां हैं, छोटी बड़ी मीडियम, सारी कंपनियां, ग्लोबल, लोकल, all private company, public company, all companies, irrespective of the geography, irrespective of the industry, irrespective of the product, irrespective of the market, the top management of all the companies are driven by one single number, and that one single number is earning per share. It is so critical, so crucial for any business. I am sure a question must be coming to your mind as to what is so great about the earning per share that it becomes so critical. I am sure, friends, all of you would know कि आपने देखा होगा कि जब भी किसी कंपनी की अर्निंग पर शेयर ऊपर जाती है, when the earning per share has increased, you will see immediately as soon as the results are announced by that company and indicating that the company has earned higher earning per share, आप देखेंगे कि अगले दिन स्टॉक मार्केट में उस कंपनी के शेयर की प्राइस उतनी ऊपर चली जाती है. Meaning what? Meaning the market price of a company's share is directly linked with the earning per share of that company. And why should it not be? Because ultimately value of a company is directly linked with the earning capacity or earning capability of a business or of a company. अब इसका क्या मतलब है? इसका ये मतलब है कि जब एक कंपनी की अर्निंग EPS ऊपर जाती है, उस कंपनी की मार्केट प्राइस on the stock exchanges go up. It means what? It means by default wealth of all the shareholders increases in the same proportion as in the increase in the market price of the company's share. तो आप समझ सकते हैं कि earning per share is directly linked with the wealth of the shareholders, or wealth of the shareholders is directly linked with the earning per share. मीनिंग व्हाट? इट मीन्स ग्लोबली पूरी दुनिया में जो टॉप मैनेजमेंट हैं उनके जो बोनसेस होते हैं वो बोनसेस आर लिंक्ड विद द अर्निंग पर शेयर. यानी कि कंपनी के जो मालिक हैं, जो ओनर्स हैं, इन्वेस्टर्स हैं, शेयर होल्डर्स हैं, जो टॉप मैनेजमेंट है, जो एमडी है, सीईओ है या सीएफओ है या सीओ है, उनके जब इंसेंटिव डिसाइड करते हैं तो उनको बोला जाता है कि जितना आप कंपनी की ईपीएस को बढ़ाओगे उतना ज़्यादा आप बोनस पाओगे. दिस इज़ द सिग्निफिकेंस and importance of earning per share, and that is why, friends, all over the world, पूरी दुनिया में top management are driven by one single number, and that one single number is earning per share. How to increase the earning per share? Now the question is how to calculate the earning per share. Of course, it is very simple to calculate the earning per share. So how do we calculate the earning per share? We will calculate the earning per share by using this simple formula. So earning per share is, you take the figure of earning after tax, you take the figure of earning after tax and divide this figure of earning after tax by the number of shares that are outstanding of that company. Number of shares which are outstanding of that company. Now this will give you earning per share. और इसका मतलब क्या है? इसका मतलब ये है earning per share tells you कि ये company how much return this company is earning per share and that is what the earning per share tells you. सीधी सी बात है, जितना अर्निंग पर शेयर ज़्यादा होगा, जैसा कि मैंने पहले कहा, उतनी ये कंपनी ज़्यादा अट्रैक्टिव होगी. जितनी ये ज़्यादा कंपनी अट्रैक्टिव होगी, उतना ज़्यादा इस कंपनी को वैल्यूएशन मिलेगा. सो यू कैन ऑल्सो क्लियरली अंडरस्टैंड दैट द वैल्यूएशन ऑफ अ कंपनी आर ऑल्सो डायरेक्टली लिंक्ड विद द अर्निंग पर शेयर ऑफ द कंपनी. Here I would like to tell you one more thing friends. Sometimes आप देखेंगे कि हिंदुस्तान में कुछ ऐसी कंपनियां भी हैं जो जिनके पास में not only they have a equity share capital but they also have something which is known as preference share capital. So अगर एक कंपनी के पास में equity share capital भी है और preference share capital भी है, तो how will we calculate the earning per share in that case? So the calculation of earning per share in that case will undergo a small change, and the change that it will undergo will be that first you will take the figure of earning after tax. From the figure of earning after tax, you will minus the amount of dividend which is required to be paid on the preference share capital of the company. You will minus the amount of dividend on the preference share capital of the company and divide it by the number of shares, and this will give you your earning per share in case if the company besides having equity is also having preference share capital. Now besides earning per share, there is one more ratio that we need to calculate, and that ratio is which is refinement of earning per share, and this is known as CEPS. What is the meaning of CEPS? The meaning of CEPS is cash earning per share. How do we calculate cash earning per share? We will calculate the cash earning per share. Number one, in the numerator we will take EAT and plus we will add to it depreciation and also add the figure of amortization. So this is what we will take in the numerator. So when you add depreciation and amortization to the figure of earning after tax, this is known as cash profit. So one is the net profit, second is known as cash profit. And how do you compute the figure of cash profit? You will compute the figure of cash profit by taking the earning after tax, adding depreciation to it, and then adding amortization to it. And then what you do, then of course you divide this by the number of shares the company is having, and this will give you your CEPS, cash earning per share. इसका मतलब क्या है? इसका मतलब ये है कि अर्निंग पर शेयर आपको बताता है कि कंपनी हर शेयर पे कितना प्रॉफिट कमा रही है. कैश अर्निंग पर शेयर टेल्स यू हाउ मच कैश कंपनी इज अर्निंग on every share. So that means जितना CEPS ज़्यादा होगा, that means company is generating so much more cash on every equity share, and it is so much better. Once again, in case if company is also having preference share capital, then how will you calculate the cash earning per ratio? So in that case, your calculation of cash earning per share will undergo a small change. And what change will it go? So you will take your figure of cash profit minus from this the figure of dividend on preference share capital and divided by the number of shares, and that will give you your cash earning per share. So friends, these are the ratios that you will calculate from the perspective of capital providers. So you will calculate return on equity, you will calculate return on capital employed, you will calculate earning per share, and you will also calculate the cash earning per share. Let's now look at the profitability from the perspective of utilization of the assets. So from the perspective of utilization of the asset, what do we calculate? We calculate a ratio which is known as return on investment. और फ्रेंड्स मैं आपको बताऊं कि अगेन आई हैव सीन ग्लोबली, पूरी दुनिया में मैंने देखा है कि रिटर्न ऑन इन्वेस्टमेंट को कैलकुलेट करने में भी पीपल मेक अ मिस्टेक, एंड इनवेरिएबली आई हैव सीन people take wrong numerator, people take wrong denominator. Sometimes people take wrong numerator and wrong denominator and calculate the return on investment. Obviously, it cannot be correct. So let's understand as to how do we calculate return on investment and how to ensure that we do not make the mistake of calculating the return on investment. So how do we calculate return on investment? So we will calculate return on investment by taking return in the numerator and investment in the denominator. So how do we calculate return on investment? We will calculate return on investment by taking return in the numerator and investment in the denominator. So how do we do it? Return on investment. Return on investment. What is the formula? The formula is return divided by investment into 100. Now this is your simple formula for calculating return on investment. लेकिन जैसा कि मैंने पहले कहा और फिर से मैं आपको बताऊं कि पूरी दुनिया में ये प्रोग्राम डिलीवर करने के बाद मैंने महसूस किया और देखा कि रिटर्न ऑन इन्वेस्टमेंट को भी लोग सही तरह से कैलकुलेट नहीं करते हैं. क्या गलती करते हैं? नंबर वन, दे मेक अ मिस्टेक इन टेकिंग द करेक्ट न्यूमरेटर. दे टेक एनीथिंग एंड एवरीथिंग as far as the numerator is concerned. Sometimes people will take EBT, sometimes people will take earning after tax, sometimes people will take some other figure. So that is one mistake people will do as far as the numerator is concerned. And same is the case with the denominator also. And I have seen again globally that there is a misunderstanding in the minds of 99.99% of the people as to how do you define investment, how do you understand investment for the purpose of return on investment. In this session, friends, we will understand as to what is the right definition of return for the purpose of ROI, what is the right definition of investment for the purpose of ROI. As a result of that, we should never make mistake in calculating the return on investment. So firstly, let me explain to you as to what is investment. It's very simple. We discussed about as to what is capital employed, and I'm sure all of you would remember what is capital employed. Money that you bring into the business is capital employed. Money that you bring into the business is capital employed. And what money you bring into the business? It is debt plus equity. Now, what is investment? What is investment? Investment is what you do with this money which you have brought into the business is your investment. Is your investment. क्या मतलब है कहने का सिंपल सा मतलब ये है कि आप बिजनेस चालू करते हैं, आप डेट और इक्विटी के थ्रू कैपिटल लेके आते हैं जो कि आपकी कैपिटल एम्प्लॉयड है, और ये जो कैपिटल आप बिजनेस में लेके आए हैं, इस कैपिटल से आप क्या करते हैं? इस कैपिटल से आप assets परचेज करते हैं. You purchase a piece of land. On that piece of land you construct a building. Inside that building you put plant and machinery, and to run your plant, having constructed it, you also purchase raw material and things like that, and all of that put together is your investment. All of that put together is your investment. So if I can give you a formula as to how to calculate your investment figure correctly, I would say investment is equal to non-current assets plus current assets minus current liabilities, and this will give you your figure of investment. And I am sure, friends, having understood as to how to calculate the figure of investment, I am sure you will never ever make a mistake in calculating ROI. Third thing that we need to understand, for calculating the return on investment correctly, and that is the purpose for which ROI is calculated. That means ROI हमको क्या बताता है? अब ध्यान से सुनिए. ROI, return on investment, tells us what? Return on investment tells us as to what kind of profitability we are generating from the use of the investment in the assets that we have made, and that is the ROI indicating to us. So I am repeating it once again. ROI हमको क्या बताता है? ROI हमको बताता है कि हमने हमारे बिजनेस में जो इन्वेस्टमेंट किए हैं, जो पैसा एसेट्स में जो पैसा लगाया है, उस एसेट्स को हम कितना एफिशिएंटली यूज़ कर रहे हैं, यानी कि उन एसेट्स के यूज़ से हम कितना ज़्यादा ऑपरेटिंग प्रॉफिट जनरेट कर रहे हैं। इसका क्या मतलब है? इसका मतलब ये है कि व्हेन यू हैव टू कैलकुलेट रिटर्न ऑन इन्वेस्टमेंट, व्हाट विल यू टेक इन द न्यूमरेटर? व्हेन यू हैव टू कैलकुलेट द फिगर ऑफ रिटर्न ऑन इन्वेस्टमेंट, प्लीज रिमेंबर व्हाट यू विल हैव टू टेक इन द न्यूमरेटर इज नथिंग एल्स बट EBIT, earning before interest and tax. Divide this figure by the amount of investment. I've explained to you as to what is the investment. Multiply this with 100 and this will give you your return on investment. And I'm sure friends, having understood this, you will never ever make a mistake in calculating in calculating return on investment. You will never ever make a mistake in explaining as to what is the purpose which is served by return on investment. So this is the third perspective from the as far as the profitability of a business is concerned. I'm sure friends, all of you must be getting a question in your mind. All of you must be getting a question in your mind, and that question is कि ये जो सारे रेशो जिनकी हम बात कर रहे हैं, क्या उनका कोई एक आइडियल रेशो है? कोई ऐसा आइडियल नंबर है कि भाई कंपनी का अर्निंग पर शेयर इतना होना चाहिए, कंपनी की ROE इतनी होनी चाहिए, कंपनी की रिटर्न ऑन कैपिटल एम्प्लॉयड इतना होना चाहिए, कंपनी का ग्रॉस प्रॉफिट रेशियो इतना होना चाहिए, कंपनी का नेट प्रॉफिट रेशियो इतना होना चाहिए, कंपनी का एबिटा मार्जिन रेशियो इतना होना चाहिए? आई एम श्योर दिस क्वेश्चन मस्ट बी कमिंग इन योर माइंड एज टू इज देयर समथिंग some ideal ratio for a particular company or any company anywhere in the world. And let me friends give you a very clear cut answer. पूरी दुनिया में किसी भी कंपनी के लिए ऐसा कोई आइडियल नंबर नहीं है, किसी भी रेशो के लिए कहीं पर भी ऐसा इंडिकेशन नहीं है कि ग्रॉस प्रॉफिट रेशियो इतना होना चाहिए, नेट प्रॉफिट रेशियो इतना होना चाहिए, रिटर्न ऑन कैपिटल एम्प्लॉयड इतना होना चाहिए, रिटर्न ऑन इन्वेस्टमेंट इतना होना चाहिए, कैश अर्निंग पर शेयर इतना होना चाहिए, अर्निंग पर शेयर इतना होना चाहिए. देयर इज़ नो सच थिंग anywhere in the world with regard to any of these numbers, with regard to any of the companies that we have across the globe. So then the question may come in your mind as to then how do you figure out? फिर आपको कैसे मालूम पड़ेगा कि ये कंपनी अच्छा कर रही है कि ये कंपनी अच्छा नहीं कर रही है? तो ये मालूम करने के लिए आपको क्या करना पड़ेगा? ये मालूम करने के लिए आपको ये करना पड़ेगा कि जो भी रेशियो आप कैलकुलेट करते हैं, you are calculating the gross profit ratio, say for example you are calculating the gross profit ratio. क्या करिए, आपकी कंपनी का जो ग्रॉस प्रॉफिट रेशियो है, इस ग्रॉस प्रॉफिट रेशियो को आप कंपेयर करिए with whom? You compare the gross profit ratio of your company with your competitor. यानी कि आपका जो ग्रॉस प्रॉफिट रेशियो है, आप कंपेयर करिए कि आपके कॉम्पिटिटर का ग्रॉस प्रॉफिट रेशियो कितना है. अगर आपकी कंपनी का ग्रॉस प्रॉफिट रेशियो आपके कॉम्पिटिटर के ग्रॉस प्रॉफिट रेशियो से ज़्यादा है, दैट मीन्स यू आर डूइंग मच बेटर देन योर कॉम्पिटिटर्स. And if it is other way around, that means your competitors are doing much better than what you are doing, and therefore you need to tighten your belt and you need to do things in your business so as to ensure that if not exceeding your competitor, at least you are giving as good a performance as your competitors are doing, so as to be able to stand apart in the market. Number two, what you can do, you can compare your number with your industry norms. Please remember, पूरी दुनिया में there are business associations for different industries, and not only for different industries but also all the industries put together. और ये जो associations हैं, what do they do? From time to time they bring out the benchmark numbers for the industry. So you have something like CII or Marathwada Chamber of Commerce or Indo-German American Chamber or FICCI. There are so many business associations, CM, ECMA. So what you need to do, you need to catch hold of them and find out in case if they have the industry norms available with them. What you can do, जो industry norms हैं, कंपेयर योर नंबर विद योर इंडस्ट्री नॉर्म। तो आपका क्या ग्रॉस प्रॉफिट रेशियो है, इंडस्ट्री का क्या ग्रॉस प्रॉफिट रेशियो है, उससे बेंचमार्क करिए और आपको मालूम पड़ेगा कि आपका ग्रॉस प्रॉफिट रेशियो कैसा है। आपका नेट प्रॉफिट जो है उस नेट प्रॉफिट को इंडस्ट्री के नंबर से कंपेयर करिए और आपको मालूम पड़ेगा कि आपका आपका नेट प्रॉफिट रेशियो कैसा है। आपकी जो अर्निंग पर शेयर है, कंपेयर विद द बेंचमार्क ऑफ द इंडस्ट्री and you will be able to figure out as to how your company is doing vis-a-vis the industry. So that is number 2 that you can do. Third thing that you can do is compare your current year's number with your previous year. यानी कि ये साल के जो आपके नंबर हैं, जो भी आपके रेशियोज हैं, ग्रॉस प्रॉफिट है, नेट प्रॉफिट है, रिटर्न ऑन कैपिटल एम्प्लॉयड है, रिटर्न ऑन इक्विटी है, रिटर्न ऑन इन्वेस्टमेंट है, नेट प्रॉफिट रेशियो है, एबिडा मार्जिन रेशियो है। तो ये सारे रेशियोज जो आप कैलकुलेट कर रहे हैं ये साल के, तो ये साल के रेशियोज को आप क्या करिए, ये साल के रेशियोज को आप आपके लास्ट ईयर के नंबर से कैलकुलेट करिए एंड दैट विल गिव यू एन आइडिया एज टू हाउ यू आर डूइंग vis-a-vis last year, your performance in the last year. And fourth thing that you can do is compare your actual number with your budgeted number, right? So as a company, I'm sure your company will prepare a budget for the entire year, and वो जब बजट बनाएंगे, so they will also list out different KPIs applicable to that budget. तो उसमें सारे KPI जो हम डिस्कस करने हैं या करने वाले हैं, वो सारे के सारे will be part of your budget that you would prepare. Now what you do, आपके जो एक्चुअल नंबर्स हैं वो एक्चुअल नंबर को आप बजटेड नंबर से कंपेयर करिए। तो जो आपका एक्चुअल ग्रॉस प्रॉफिट रेशियो है वो एक्चुअल ग्रॉस प्रॉफिट को आप बजटेड ग्रॉस प्रॉफिट से कंपेयर करिए, तो आपको ध्यान में आएगा कि हाउ आर यू डूइंग एज अ कंपनी एज कंपेयर टू योर बजट। And that will not only give you an idea about your performance, but it will also give you hints about the steps that you need to take to correct the course of action in case the performance of your company is not in line with the budget of your company, right? So having understood the profitability from the perspective of the profitability, the second ratio that the businesses would collect is liquidity analysis. So for taking different decisions in your business, second analysis that you do is known as liquidity analysis. So now the question is, how do you do liquidity analysis? So liquidity analysis के लिए आपको क्या करना है और आप क्या करते हैं, और liquidity से आपको क्या मालूम पड़ता है, liquidity से आपको क्या मालूम पड़ता है? So number one, please remember, what is liquidity? Liquidity is very simple. Ability of a business to take care all its short-term obligations is liquidity. यानी कि एक जो कंपनी है उसके जो शॉर्ट टर्म ऑब्लिगेशंस हैं, यानी अगले एक साल में जो भी ऑब्लिगेशन, जो भी पेमेंट उस कंपनी ने करने हैं, क्या इस कंपनी के पास में वो जो शॉर्ट टर्म ऑब्लिगेशंस हैं उनको डिस्चार्ज करने के लिए इनफ लिक्विडिटी है, एंड that is your liquidity analysis. How do you find out whether a business is having correct liquidity or not having correct liquidity? For this, what you do, you calculate two ratios. Ratio number one is known as current ratio. So how do you calculate the current ratio? Current ratio is you take in the numerator current assets and divided it by current liabilities, and this will give you your current ratio. अब मैं यहाँ पर आपको एक चीज़ बता दूँ कि बहुत समय तक एक मिथ था लोगों का कि कंपनी का करंट रेशियो जितना ज़्यादा हो उतना अच्छा, लेकिन मैं आपको बता दूँ कि ये मिथ है, ये गलत है. दिस इज़ बैड वर्किंग कैपिटल मैनेजमेंट. एज अ बिजनेस your aim and objective and target should always be to ensure that your current ratio is as low as possible. And why do I say this? I say this because if you block too much of money in inventory, if you block too much of money in receivable of yours, please remember you are unnecessarily locking your capital in your inventory and in your receivables, which is not giving you any return. And therefore, what as a design, as a choice you must aim for in your business is to ensure that your current ratio is as low as possible. As low as possible. Not only it is as low as possible, but it must be your endeavor that progressively every year your current ratio should keep on declining, and that, remember, is a sign of operational efficiency. So that's, remember, your ability to take care your short-term obligations will not come from how much current assets you hold in your business. Your ability to discharge your short-term obligations will come from the fact that how much profit are you earning in your business and how much of that profit you are able to turn in cash, and that will give you the ability to take care of your short-term obligations. But to find that out, how do you do it? You calculate this ratio, which is known as current ratio. And how do we calculate the current ratio? Current assets divided by current liabilities is your current ratio. There is a refinement of current ratio, and this refinement of current ratio is known as quick asset ratio. Quick ratio, this is known as quick ratio. So how do you calculate the quick ratio? Quick ratio you will calculate by taking the current assets minus the inventories from the figure of the current assets that you have and divided it by the current liabilities. Now the question may come to your mind as to why do you deduct the inventories from the figure of current assets for calculating the figure of quick ratio? Answer, of course, is very simple, because your inventories are not as liquid as your cash and bank is, as your receivables are, and therefore you want to find out is the quick ratio. That means the bigger degree of your liquidity, and that is how you will do. So you will take current assets minus your inventories divided by the current liabilities, and that will give you your quick ratio. So that will give you your quick ratio. Now the third ratio that we need to calculate is known as solvency ratio. How do we calculate the solvency ratio? What does it tell us? So first of all, let's understand what does the solvency ratio tells us. Solvency ratio tells us as to whether the business has ability to take care of all its long-term obligations. That is the solvency. कहने का क्या मतलब है? कहने का मतलब ये है कि solvency ratio आपको ये बताता है कि क्या ये बिजनेस में अपने लॉन्ग टर्म ऑब्लिगेशंस को डिस्चार्ज करने की कैपेबिलिटी है या नहीं है, एंड दैट इज़ व्हाट द सॉल्वेंसी रेशियो विल टेल यू. तो अगर मैं थोड़ा सा आपको इंटरेस्टिंगली बना के बोलूँ तो मैं कहूँगा द लिक्विडिटी इज शॉर्ट टर्म सॉल्वेंसी एंड सॉल्वेंसी इज लॉन्ग टर्म लिक्विडिटी. तो फिर से बताता हूँ. सो व्हाट इज लिक्विडिटी? लिक्विडिटी इज शॉर्ट टर्म सॉल्वेंसी ऑफ अ बिजनेस, एंड व्हाट इज सॉल्वेंसी? सॉल्वेंसी इज लॉन्ग टर्म liquidity of a business. So now the question is, how do we calculate the solvency ratio? So solvency ratio, friends, we can calculate from two perspectives. Perspective number one is the historic. So historically अगर हमको solvency ratio calculate करना हो तो हम कैसे calculate करेंगे? Historically अगर हमें solvency ratio calculate करना है, so what we will do? We will take solvency ratio historically. How do we calculate? Take the figure of non-current assets, add the figure of current assets, and divide this total by figure of non-current liabilities plus current liabilities. If this figure is more than 1, that means business is solvent. अगर ये जो figure है ये more than 1 है, that means business is solvent, and that talks about the solvency. So this gives you historical perspective about the solvency of a business. How do we get an idea about the solvency of a business futuristically? So futuristically अगर हमें एक business की solvency के बारे में मालूम करना है तो हम एक ratio calculate करेंगे, and what that ratio is? That ratio is EBITDA divided by the interest and repayment obligation. So this will give us a futuristic idea about the solvency of a business. That means जितना एक बिजनेस की एबिटा हाई होगी उतना ज़्यादा उस बिजनेस की सॉल्वेंसी बेटर होगी, और जितना उस बिजनेस की एबिटा कम होगी उस बिजनेस की सॉल्वेंसी विल बी in a danger to that extent. So this is how we will figure out the ratio of solvency. So friends, we will take a break or pause here, and what we have covered so far, we have covered so far 3 categories of the ratios out of 8. Which are the 3 categories that we have covered? We have covered category number 1, that relates to profitability, and under the profitability we have covered it from 3 different angles: from the angle of sales, from the angle of sales, and we have covered the so far 3 perspective, three categories. Category number 1 is the profitability. Within profitability, 3 different angles: number 1 sales, number 2 capital providers, and number 3 the revenue generating capacity of the investments that we have done. The second category of the ratios that we have discussed is about the liquidity. Third category of the ratios that we have discussed is about the insolvency. We still have 5 more categories to go, and what we intend to do, we intend to take a stop now, and will come out with 2 more videos covering the remaining 5 categories of the ratio analysis as well. So please stay tuned with us, remain in contact with us, remain connected with us, and keep sharing your feedback and your impressions and your ideas about how did you find these videos, and do let us know as to what you would like us to cover, what more you would like us to cover in future, and we would certainly do that. You can of course be in touch with us through through WhatsApp, or by sending mail to us, and I am happy to share here my WhatsApp number and also my email ID. If you like this video, please do subscribe to our channel, and also share this video with all your acquaintances so that they also can benefit from this video. So friends, with this we come to the close of this session. See you soon with the second part of financial statement analysis, covering some more ratios. Thank you.